Good day, ladies and gentlemen, and welcome to the show on this October the 9th, Saturday the 9th of October. I'm going to explain to you guys what this whole Evergrande, you've heard of Evergrande in China. Sure, most of you have in my audience, and you don't really know what's going on. And you hear an awful lot of commentators on the mainstream right now saying this whole thing's going to blow over. Well, for the moment, it hasn't really erupted yet, but it's coming. It's coming like a tidal wave, and I'll explain to you guys why, and I'll try to go a little bit in depth of what's going on. Back in the late 90s, I think it was 1998, China put a law in where the provinces all across China could sell properties to make up for income. They could make income by selling properties. So they sold properties to property developers. Evergrande was one of the big property developers. The property developers, in turn, started offering something to the people of China called a wealth management product. That's what it was called. And it's kind of like a hybridized cross between you can't really put your finger on exactly what it's like. It's in the investment community of the West, maybe kind of like but they're called wealth management products. They're an animal all to their own. They're a little bit different than all of the wealth products we have over here, which are I consider them risky investments. But in China, these wealth management products, what they would do is they'd offer a rate of return of interest to the people who invested in a wealth management product. So you basically gave them your money to a big company, maybe not Evergrande, it could have been any one of these big real estate developers who was offering wealth management products. You basically invested your money with them and bought these wealth management products, and they'd pay you a high rate of interest on them. And they went to the efforts, these Chinese developers and banks, to make it up like what's called a shadow banking system. It's like they're not exactly banks, but they're not exactly not banks. They even look like a bank. You go to the place where they sell the wealth management product, and they might have a big sign of the real estate developer's name on it, and they show all the big projects that they're working on, and it looks like a bank. They have tellers in there and everything, and it's all very above board looking. Let's just put it that way, to make you feel very secure that your money is being invested in these new real estate developments, and that they're going to pay you a very high rate of return, sometimes as much as 10% per year, where the banks out there wouldn't give you nothing hardly. So for the Chinese, they look at this and they say, oh, look, we're going to get like 8% or 7% per year on our money that we invest in these wealth management products. So they went in and they started investing. The first people that invested, they told their other people, they said, you should put your money in here, into these wealth management products. I had my money in here all year last year, and I made 8%. How much are you making in the bank? Chinese man might say to the other Chinese man, well, I'm only making like 1.5%. And he says, well, I'm making 8%, and I made it all year last year, and it's really secure. Come to the bank with me, and I'll show you. And they go to the bank, and all these tellers are there and everything. It all looks official, big building, big high-rise building and everything else. So I'm going to invest in this, too. I'll invest in these wealth management products. And year after year, they paid out these high dividends. And so the Chinese people started to really trust in the shadow banking system and in these wealth management products. But what was really going on was they were taking their investment money, the real estate developers, buying new properties from these different provinces in China, and then putting up high-rise buildings, and then selling out the apartments in the high-rise buildings, and all kinds of money was pouring in to this pool, this hidden pool of these wealth management products. But what it always relied upon is the price of real estate going up so that they could pay off these high dividends in the wealth management products. So this went on for like the last 20 years. It's been going on. And it's been growing bigger and bigger in China, with real estate always going up in price, heavy demand for real estate and everything. And what's happened is the wealth management industry now get this, guys, get this. It has grown to a whopping $4 trillion industry in China. Now that's just the wealth management part of it. That's just the capital part of it. These products, these wealth management products, which really are not actual money. They're just a wealth management product held in a pool by these big property developing companies in China. We're putting these high-rises up as fast as they can and selling out all the apartments in them, and this is where the money's pouring in. Well, we just know Evergrande is one of these big, huge property developers. They're one of the biggest in China. And they are finding financial difficulties right now. And so I thought for a little while there, a week or two ago, that this might blow over. I didn't know. I said, maybe they'll be able to pay. Their Evergrande might be able to pay, and maybe this will blow over. So I haven't mentioned it too much on my shows. But it turns out that the contagion is starting to spread now amongst other property developers who also have these wealth management products. So what we're looking at in here is we're looking at a $4 trillion wealth management industry. But that's not all, guys. That's not all, guys. Is what's connected to this wealth management products and these property developers is the real estate market in China, which the Chinese people invest over 70% of their money in real estate. And of course, this is kind of what's pulled them up from being China was trying to move into the position of being a bigger, more powerful, wealthier nation than they were. Real estate was a big factor of this. So what's really involved here, what we're really talking about, is a $60 trillion real estate market in China. Now, as these developers start to go down, and now we're seeing the contagion, I guess it's spreading to 3 different property developers are in trouble. Contagion's starting to spread. This all moves like a slow motion train. And what I mean by that is they missed their first payment, Evergrande, but they gave them a 30-day grace period. Later this month, that 30-day grace period runs out, guys, runs out. And what we're going to see is possibly liquidation of properties in China. This, in effect, goes directly into the Chinese property market, which, like I say, is a $60 trillion industry. Not counting the wealth management products, which is a $4 trillion industry. Guys, we're talking in trillions here. Okay, so let's put this into perspective. I believe Lehman Brothers was $600 billion. It took down the global economy. Took down the globe back in 2008. Okay? Takes these things a little while to unfold. What we're talking about here is possibly, let's say, the $60 trillion Chinese real estate industry goes down by 10%. Okay? Well, we're talking then $6 trillion. Well, what about the wealth management products, which could also become worthless? We could be looking at another $4 trillion. So we could be talking about something in the area of maybe $10 trillion here. Well, Lehman Brothers was $600 billion. Divide $600 billion into $10 trillion, and you get many, 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 many multiples of Lehman Brothers here. But like I say, all of this is going to take time to unfold. This isn't going to be something where tomorrow morning the system is crashing. But it is going to be something where in the year 2022 the system's going to be crashing, and probably early in the year. So we got about one more quarter left. A little bit less than a quarter left until 2022. And I'm going to tell you guys what it's looking like to me. It's looking like to me that the Chinese real estate market, Chinese real estate developers, the banks that are connected into them, that all of this is going to spread with contagion in China. And at the same time, in December of this year, we've got an impasse with the United States debt ceiling. Now, I know you guys all think, oh, the debt ceiling, the debt ceiling. They're going to push it off for a couple months. I think it's December 3rd, something like that. Okay? It's going to come due again, the whole thing. Right? Bigger and bolder than ever before. We got an impasse. And what that means is they will possibly get something done. But they're going to push it so close to the line, you know, that they're going to cause a they don't have to step over the line. That's what I'm telling you guys. Is if they just push it close to the line. There was a period a number of years ago when they pushed it close to the line, and the United States was downgraded. Their credit rating was downgraded. What we could be looking at is we got a number of fuses being burned right now. You know, if you got a keg of explosives, and you got a number of fuses being lit. Not just one fuse, but many fuses. This Chinese Evergrande situation is a fuse. Fuse takes time to burn, you know, but eventually they're going to get to the keg. We got the debt ceiling, which I see just as another fuse being lit, you know, and we also got inflation, massive inflation. We've got all of the ports around the earth right now, all stocked full of cargo ships, not going anywhere. We've got the worst, and that's another thing, guys. All these cargo ships that are trapped in ports right now around the world, they're still working off of inventories that are built up, like stores and stuff. You know, they have inventories. They build up a large inventory. It takes time to work through that inventory. You got all these cargo ships not being loaded, or unloaded, I should say, all backed up in ports. What happens when we work through the inventory we have now? And this is another delayed reaction that's pointing toward the first of the year, when the shelves are going to really be bare. You know, and so next year, guys, is setting up to be a plus. We got all of these people, a lot of people who are out of work. They're cutting all these social programs back. The whole thing is a recipe for disaster, and it's all pointing the finger toward 2022. So yeah, listen, guys, we might have a pretty good Christmas. Make the best of this Christmas. You know, a lot of people out there are saying, "Oh, we're gonna have a bad Christmas because maybe you can't get presents, or maybe you can't." You don't need presents. If you can't get a turkey, go out and get a ham. If you can't get a ham, get a chicken. But it's the spirit that counts. And the world is still held together. Be it held together with springs and glue and bubble gum and old baling wire, but the world is still holding together. And I think it's going to still be holding together through this Christmas. So it's up to you to make it a good Christmas. You don't have to have the latest gizmo, but you can still have the Christmas spirit. And so, you know, we're coming around to Christmas this year, and I told you guys, I've been telling you guys a long time, it's going to be a good Christmas. Let's make it a good Christmas. Because next year, 2022, looks black. It's a bad-looking year, guys. It looks like it's setting up to be a Great Depression for the entire world. And it's going to be some sort of the depression it looks like that's setting up for next year looks to me to be not like the depression of the 1930s, where the value of your dollar went up. This looks like a stagflation type depression, where you've got inflation and an economy that's getting weaker and weaker. Not just for us, but all the countries on Earth, including China. Looks like it's going to be a very bleak year. the year 2022. One that they'll remember for the history books. Thank you guys for listening to my channel. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.